Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the ETF.com conference. And I'm with Luciano Siracusano, Chief Investment Officer of WisdomTree. Luch, great to see you.
Good to see you again, Tom.
Listen, your subject matter and your ETFs are pretty popular here, specifically based on what's going on with the dollar taking off and foreign currencies crashing. Give us kind of a snapshot of why everything's really lining up just the way you saw it.
Well, it's interesting because the last time we spoke about a year and a half ago, we were talking about international investing and how there's really two bets being made.
Right.
One is being made on the stocks, the other one is being made on the foreign currencies. And a lot of advisors historically just defaulted to being 100% unhedged internationally. And now you're seeing in the last year the impact of what can happen to a portfolio when the yen declines 12% in a year, or last year when the euro declined 12% in a year. It's a tremendous headwind. And so if you were buying Europe, for example, last year unhedged, you were probably down about 8%. If you could hedge out the currency, you might have been up 6 or 7%. So you're looking at things like 15 percentage points of differential just because you got the currency right. And I think advisors are saying, wow, that's meaningful in my allocation.
Absolutely, and so a lot of investors, advisors, to some degree, weren't aware of that risk, felt like they got blindsided, but here we are today, we got to move forward. Is the worst over, or might we just be in the second or third inning here?
Well, something like the euro has already had a big move, but the euro could easily go to parity against the dollar. There could be another 10, 15% down from this point. I mean, Mario Draghi, who heads up the ECB, very aggressively is going to be buying European bonds, about 70 billion a month, until they get that inflation rate up near or closer to 2%. He has to fight deflation. Now, he said he'll be buying bonds through September of next year, but it could go longer if they still have a deflation problem. So you have tremendous amount of euro printing going on, which is going to dilute the euro. It should depreciate from here unless the European economy starts to grow quicker.
And on the other hand, we're going to see Fed rate hikes, so that's going to put more pressure on a higher dollar. And there have been periods of time, now we got to go back a couple decades, where we saw the dollar appreciate substantially. I mean, it's only kind of a drop in the bucket compared to some moves that we've seen in the last 3 or 4 decades, right?
Yeah, the dollar has had 2 great bull markets. One was in the 80s under Reagan, until it got so high it pushed the value of the dollar back to the colonial age, and they had to do something about it. And you had another great bull market in the 90s under Bill Clinton. We think we're on the verge of another multi-year bull market in the dollar. Not just because Japan and Europe are easing and the Fed may be tightening soon, but there's also stronger economic activity happening in the US. And once you get a meaningful differential in the short-term rate, which you don't have today, once that happens, you're going to have another catalyst for further dollar appreciation.
Okay, so let's talk strategy. Advisors listening, watching right now, thinking that this trend is going to continue. What's a good basic strategy as far as their global equity allocation?
Well, you got to say, how much of my allocation is international, and then how much of my international do I want to be 100% unhedged? Remember, if someone is benchmarked to IFA, they're 100% unhedged. ACWI, all world, 100% unhedged. And if Japan and Euro are the biggest pieces of your international exposure, and those currencies are the ones that are likely to depreciate from here on out, the question is, how much hedging should you be doing? Our view is if you don't have a point of view, you should be 50-50, okay? If you do have a point of view, you maybe want to do more than that. Now, interestingly, today, WisdomTree launched our WisdomTree ETF models, which we put on our website, which give financial advisors our best ideas about how to use ETFs internationally
so
and in what ways.
So advisors can go on to WisdomTree.com, and in the financial advisor site, you've actually given different models that, based on what's going on right now, might be a guide for their allocation ideas, right?
Yeah, we have a conservative, a moderate, and aggressive, and depending on the suitability of their client, they can determine what percentages might they use them in. So it's a strategic model, but we're also doing some tactical tilts to reflect where we think we are in the market today.
That's great. I'm looking forward to checking it out. Luch, as always, great to see you.
Great to see you, Tom.
Thanks.
Thank you.